Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Business development companies, or BDCs for short, like today's income pick, PennantPark Investment Corp. They're traded on New York Stock Exchange under symbol PNNT. They are growing in popularity with both small private companies and passive income investors. And why is that? Well, first, cash-starved companies love BDCs because they provide them with much needed capital to grow their business. And right now, solid economic data and lower interest rates should result in BDCs issuing more debt. And second, investors love BDCs because of their sky-high dividend payouts. Like real estate investment trusts or REIT, BDCs, or what we like to call alternative banks at income investors, have to distribute 90% of their taxable income to shareholders through dividends. And John, I have to ask, why can BDCs provide dividend payouts far greater than the big banks do?
Thanks, Mo. Good question. Because the private companies BDCs lend to are considered small by Wall Street standards, generating, up to $100 million in annual revenue, they're seen as riskier places to invest. So as a result, alternative banks can charge higher interest rates. This means more money and higher dividend payouts. Yes, interest rates are coming down, but they are still well above the pre-2020 health crisis levels of around 1.5%. And plus side for BDCs, interest rates are expected to remain above those pre-2020 levels for years. Factor in soft economic landing, and it's the perfect scenario for BDCs.
And now let's talk a little bit about PennantPark. Can you tell us what do they do?
Well, PennantPark is, as you can imagine, a BDC. It's a private equity fund that focuses on companies owned by middle market private equity sponsors with a track record of supporting portfolio companies. Why middle market companies? The U.S. middle market includes nearly 200,000 individual companies generating $10 trillion in annual revenue and represents 1/3 of the U.S. economy. Now, if U.S. middle market companies were a country on their own, they'd be the world's 5th largest economy on a standalone basis. So there's lots of potential there. Now, PennantPark core focus is U.S.-based companies, where it invests between $10 million and $100 million across the entire capital structure in companies with earnings of $10 million to $50 million, a strong free cash flow and growth potential, of course. Now, as of September 30th, which is the most recent data we have, PennantPark's overall portfolio consisted of 129 companies with an average investment size of $7.8 million and had a weighted average yield on interest-bearing debt investments of 13%.
Looking at numbers, how is Pennant Investment doing?
It was a decent quarter. For the third quarter of fiscal 2024 ended June 30th, 2024, PennantPark reported revenue, which can also go under the term of investment income, of $37 million, down from $45 million in the same period last year. The company reported solid net investment income of $15.7 million or 24 cents per share. And for the third fiscal quarter of 2024, PennantPark invested $163.1 million in 11 new and 42 existing portfolio companies with a weighted average yield on debt investments of 12%.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, how did this impact the company's dividends?
Thanks to its robust earnings stream, PennantPark is able to provide investors with reliable monthly distribution. Now, if you look at the company's chart on Income Investors, it might look like the company cut its payout in 2023, but it didn't. That's when it switched from a quarterly dividend to a monthly dividend. This past June, the company actually increased its monthly dividend payout slightly more than 14% to 8 cents per share. It has maintained that payout since then for an annual distribution of 96 cents per share for a pretty frothy forward yield of 13.73%.
Looking at the PennantPark stock price, they recently hit a record high.
Yeah, now in addition to a reliable ultra-high yield distribution, PennantPark has also provided shareholders with outsized gains, including a new record high in July. Now, PNNT Stock has given up some short-term ground of profit-taking, but continues to trade near those levels. So that's recording. PNNT Stock is trading hands at around $7 per share and is up slightly more than 12% year to date and 28.5% year over year. And the outlook for PennantPark stock remains robust, with analysts providing a 12-month share price target of between $7 and $8 per share. Now, the higher target of $8 would put PNNT stock in fresh record territory.
John, thank you so much for your insights. Just to recap, PennantPark Investment Corp is a great BDC with a strong underwriting process that helps invest in progressive middle market companies, an area underserved by banks and large investment managers. As a result, PennantPark is able to negotiate superior loan structure with more favorable pricing, which results in generating excess returns for its investors. And with more than 90% of its debt portfolio floating rate, it is able to generate a lot of cash, which it passes along to shareholders through its reliable monthly distribution. That's it for today. And make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.